Professors FM.
I'm Bridget Stomberg.
And I'm Lisa DeSimone.
And this is Taxes for the Masses.
Today's episode is on the tax proposals put forth by the 2024 presidential candidates.
In theory, tax policy could become an area of focus during the 2024 U.S. presidential election. So in this episode, we highlight the federal income tax proposals from the Democratic camp. Hello, Lisa.
Hello, B.
It is election season.
Ooh, it's been a bit of a doozy so far.
You know, for any of our listeners who went hard on their summer vacation and missed all of the action, let's get you up to speed.
Okay.
So President Biden gave, I think, what we can classify as a terrible debate performance against former President Donald Trump on June 27th, which had many Democrats in office.
And George Clooney. Calling for him to drop out of the race. And on July 13th, former President Trump survived an assassination attempt. Finally, on July 21st, President Biden did, in fact, drop out and give his endorsement to Vice President Kamala Harris. It's been a busy few weeks.
Yeah.
Clearly, there's a lot going on in this election, and I'm self-aware enough to acknowledge that the candidates' tax policies are maybe not at the top of many people's lists in terms of what's going to determine their vote.
Nope.
Nonetheless, taxes are kind of, our thing.
Yep.
It's what we do.
It's what we do.
What we know. They are important, even if that's a highly relative thing in this election. So yeah, whatever. We're going for it. We're trying to do our tiny part to the democratic process by outlining the candidates' tax proposals, and that's our jam. We're sticking to it.
You're entirely correct, entirely correct. And I must admit that at some point I questioned whether or not we should even do these episodes. We had this idea in April when things were relatively normal, quotey pause normal. And we didn't do them early. We wanted to do them around the debate. And then it was we can't talk about taxes after what we just saw.
Yeah, speak for yourself. I never brought myself to watch the debate. I've never seen it. I've never seen maybe one or two clips from the news. But yeah, nope.
Nobody wanted to talk about taxes after that. But, we've said it many times that one of the reasons we started this podcast was to cut through some of the noise and the misinformation about taxes and try to discuss taxes in a simple and an unbiased way. And if we're being honest and abstracting away from all the craziness, election season is literally the perfect opportunity and the most important time to do that, I think.
Yep.
This election, we're not going to pretend that this election is an exception. So to that end, we're going to devote 2 episodes at least. We might throw in a third one because 3 is better than 2, to highlight the candidates' tax proposals.
So we're going to start today with Vice President Harris, and we need to offer a bit of a disclaimer here, which is that we are recording this episode at a time when she has been a candidate for 2 weeks.
Yes, very, very, very brief amount of time.
We just found out her running mate maybe a day or 2 ago.
Yep.
Right? And I think we'll be releasing this episode maybe 10 days after that. So all this to say that it's early days in the Harris campaign, you could say. And she has not officially released any plans specific to income tax proposals. So we're doing our best here.
That's right. She's not released a tax proposal. She's been too busy texting voters, asking for donations.
I mean, she's got other things on her plate right now.
She does. Out there raising $310 million.
So we're going to focus on what Vice President Harris has proposed in the past, specifically what she discussed in the run-up to the 2020 presidential election year, when she was a presidential candidate before she became a part of the Biden ticket. And although the details might differ a bit, we're going to try to focus on the general themes or principles that are very likely to guide any specific proposals that her campaign may issue at a later point in time. And where we don't have specific details from the Harris campaign, we'll focus on what Biden's fiscal year 2025 budget proposed, because as some have said, a Harris presidency would be, for all intents and purposes, a continuation of the Biden administration, at least from a tax policy perspective.
Yep.
Ready to start?
I am. And I like that approach. I like that disclaimer. Thank you for that. So we're going to break it down. We're going to kind of have two chunks. We're going to start with business tax proposals, and then we'll move into individual tax proposals. So let's start with the business side of things.
Okay.
Up first on the agenda is is likely to be a proposal to raise the corporate tax rate to some amount above what it is now. So it's 21% right now.
Yep.
Reminder that before 2017, the top rate was 35%.
Yes.
Biden had planned to increase it to 28%. So he was kind of going for a middle ground.
Yep.
Harris, there's been some talks that she would like to see it go all the way back up to 35%. So this is the first place where we kind of have to abstract a little bit from the details and focus on the principle, which is that Democrats want to raise corporate taxes.
All right. And that begs the question, why do they want to raise the corporate tax rate? Well, Treasury characterizes a rate increase as, quote, an administratively simple way to raise revenue.
Okay.
And a way to reduce income inequality.
Interesting.
Multiple estimates suggest that raising the corporate rate to just 28% would indeed increase tax revenues by about $1.3 trillion over 10 years.
And that's easy to see. Higher tax rates, all else equal, higher revenue. The reduction in income inequality might not be as obvious. And so as far as that's concerned, there is some evidence that reducing corporate tax rates contributes to rising economic inequality. Why would that be? Because gains to capital income are larger for top earners relative to bottom earners.
Okay.
So in general, I think it's safe to say that Harris is not a fan of that lower 21% tax rate. I think we could go a little further and say that she's not a fan of the Tax Cuts and Jobs Act in general. Yeah. That was Trump's signature tax legislation passed in 2017.
Okay.
In fact, she was quoted as saying that she would, quote, get rid of the whole thing, end quote. But she would keep any provisions that benefit low and middle income earners, which we'll talk about a little bit more later.
Okay.
So we're not sure what specifically Harris is going to do, but I think it's safe to say that theme number 2 would be continue to crack down on tax avoidance by these large multinational corporations, and doing that through likely imposing more penalties for things that they are accused of doing, like aggressively shifting their income, strategically transfer pricing their intercompany transactions, and things like that.
Yep.
All right, so Democrats obviously are going to pick apart the TCJA, the Tax Cuts and Jobs Act, because they didn't write it and they didn't vote for it.
Nope.
But what do we think Harris would do with the Inflation Reduction Act, which was Biden's tax legislation from 2022? Do we think she would keep that intact?
Yeah, I mean, I think it's unlikely she would try to repeal any parts of the signature legislation of the Biden presidency because she was part of that administration. But she was the tie-breaking vote, wasn't she? In the Senate, yes.
Yeah.
But she might try to enhance and improve, expand some of those provisions. For example, the Inflation Reduction Act introduced a new alternative tax on corporations equal to 15% of their book profits that they report to shareholders. And that's for corporations with financial statement or book income in excess of $1 billion. And the 2025 budget proposal from Biden's staff calls to increase that rate from 15% to 21%. So basically adding more of a penalty for reporting profits to shareholders when you aren't reporting taxable income to Treasury. And Harris might propose an even higher rate than that.
So, you and I are not a fan of this tax as it exists now. I don't think we'd be a fan of a higher rate.
No.
Does a disparity exist between those two measures of income?
Yes.
Yeah.
Yep.
Does it mean that corporations are doing anything nefarious?
Not necessarily.
Not necessarily. Okay. As we've talked about ad nauseum, the computation, what goes into book income, that number that you report to your shareholders, and what goes into taxable income, it's two totally different sets of rules in this country.
Yep.
And there is no clear reason that they should be the same or that we want them to be the same.
True that.
So this provision is, I personally, if I'm being cynical, I think it's just a revenue raiser. It's set to raise $137 billion of tax revenue over 10 years. So again, this is tying into theme number 1 and number 2, increasing taxes on large corporations. And like you said, because you have to have income of greater than $1 billion, a lot of the corporations that are subject to this are going to be multinational.
Another thing that Vice President Harris might also want to double down on if she becomes president is the excise tax on corporate stock repurchases. So right now there's a 1% tax on net stock repurchases during the year. And Biden's budget proposed to raise that to 4%. So I guess you could say she might want to quadruple down.
Sounds like it.
Why?
Well, our listeners may remember that stock buybacks tend to be tax favored or tax advantaged relative to dividends.
And so the reason that dividends and stock repurchases are taxed differently is because they're two different transactions.
Ding, 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 ding. Well, the White House fact sheet would explain it by saying that this higher excise tax would encourage businesses to invest in their growth and productivity rather than just funnel tax-preferred profits to foreign shareholders and other investors. But
yeah, it sounds good, but the evidence is just not there.
no, it's really not.
It's really, really not there. Research generally finds that stock repurchases don't crowd out investment.
No.
Almost 80% of surveyed executives make buyback decisions after they determine their other investment plans. They're putting their cash to good use wherever they find it. And then if they have cash left over, they decide to do a repurchase. And that behavior is perfectly consistent with finance theory that says that companies only give funds back to shareholders when they have no better productive use of the funds within the company.
Those researchers that conducted that survey also asked executives, what would you have done with the cash that you used for the buyback if you hadn't done the buyback? And the White House assumption is that they would have reinvested it in growth and productivity. But what the executive said, 40% of executives said, was that they would just use it to pay down debt. That was the most common answer. Only 15% of executives said that they would actually invest more.
Lastly, the 1% tax under the Inflation Reduction Act on these stock buybacks didn't stop buybacks.
No.
The 1% tax became effective in January of 2023, and that same month, announced share repurchases tripled over the prior year.
Yeah, this is another revenue raiser, pure and simple. And that's fine. That's fine. If you want to raise taxes on corporations, great. But let's not try to say that it's going to change behavior because we literally have no evidence that it's going to.
Yeah.
But yes, this is going to raise an estimated $166 billion.
So I think that's a good overview of what we might be able to expect from candidate Harris on the corporate income tax and excise tax side. Are you ready for the individual provisions?
Not really, because I hate talking about individual taxes, but okay.
I love it. Why do you hate it?
I know you do.
Oh. We've highlighted several top-line proposals with respect to corporate taxpayers, and the general theme is ensuring that large corporations pay their quote-unquote fair share of taxes. That theme continues as we move on to individual provisions and making sure the wealthy pay their fair share.
So we've talked about the big corporations. We've defined them. Now we have to start by defining who is wealthy. Who is a wealthy individual? Go.
Okay, so the easy answer, billionaires.
Oh, yes.
That's by the look on your face and your laugh, I'm assuming that's a non-controversial statement. If
no
you're
argument
a billionaire, you're wealthy.
Continue.
Okay, so Biden's budget proposal favored the creation of a billionaire tax, with the rationale being that many extremely wealthy individuals made their fortunes through investments and activities that were taxed at lower capital gains tax rates. Those are rates that are lower than the tax rates that us ordinary laborers pay on our compensation.
Yep.
But we don't know if candidate Harris favors such a tax.
That is correct. But you've raised a really substantive issue there, even ignoring whether there's going to be a specific tax on billionaires, whether Harris is going to favor something like that.
Okay.
And the issue that you raised is who should be subject to those highest tax rates right now that are reserved for ordinary income, and who should benefit from those preferential rates on capital gains. So right now,
Okay.
the ordinary rates are higher than the capital gains rates at every point of the income distribution.
Yep.
What do the Democrats have to say about that?
Well, both Biden and Harris would raise the top individual rate from 37%, which is the rate that was enacted by the Tax Cuts and Jobs Act, that famous little act under Trump in 2017, back to 39.6%, which is where the rate was before that tax law. And that would happen for some set of wealthy households making less than $1 billion. The problem is where to draw that line.
Absolutely. So again, we have a progressive system in the U.S. The more you make, the higher your tax rate is. So the Democrats want to raise that rate from 37 to almost 40%, and they probably want to expand who is subject to that rate. So as Lisa said, it is really important for us to understand who is wealthy enough to go into that highest bracket. So it's a really important question. And I'm sure many of our listeners have heard Biden propose that this higher rate for ordinary income would fall on single taxpayers making over $400,000 a year and on married couples making over $450,000 a year, which is a marriage tax penalty. Big old fat one. Now, Harris was supportive of that $400,000 threshold during her time as vice president, but it's worth noting that during her 2019 presidential campaign, she focused on a much lower income threshold of only $100,000.
Oh, wow. Okay.
Yes, quite lower. There also seems to be some fixation not from these candidates in particular in their written proposals, but we always hear that we want to tax the top 1%. Like, we like to throw that around a lot.
Okay.
And so we did some digging, and what does that mean? What do you have to make to be in the top 1%? Is it should it be state by state? Should it be national? Like, none of this has clear answers, right?
Okay.
So there are several different ways that you can look at this, several different estimates of how much income you need to earn to be in the top 1% of U.S. taxpayers. But spoiler alert, they are all pretty much higher than $400,000 a year. And they're definitely higher than $100,000 a year.
Yes, much higher.
Much higher. What is your guess?
Oh, gosh, top 1%? Yeah, I guess it's probably even higher than $1 million a year in income.
So you're very close, my friend. So the Congressional Budget Office estimates that the top 1% of taxpayers, households in America, make over $1 million of average household income, and that was in 2019.
Oh, okay. So with inflation, it's probably like 2 now.
I mean, yes, if we're being real.
Yeah. Interesting. Okay. I think at least some voters like the idea of raising taxes on the quote unquote wealthy.
Yep.
Or at least not raising taxes on those who aren't wealthy. But the feeling of wealth is clearly subjective, right? It's very subjective. The Wall Street Journal ran an article in April of 2024 that highlighted how many taxpayers making around $400,000 don't consider themselves wealthy.
Exactly.
And of course, they're turned off by Democrats' fixation on that number for that reason. Okay, so that's on ordinary income. Let's turn now to capital gains or investment income. There's apparently support from Vice President Harris to raise our capital gains tax rates, but it's unclear how high and for whom. So Biden proposed to tax long-term capital gains and qualified dividends at 37% for taxpayers with taxable income in excess of $1 million. That's the top ordinary tax rate. So he would bring them into alignment with each other.
And if I may, that $1 million is the closest thing we've seen to the top 1% of any of these other income thresholds that we've talked about so far.
That's true. That's true. Biden also wanted to implement a minimum tax of 25% on all income, including unrealized capital gains, which are gains on investment income when you haven't yet sold the investment. It's just that investment has appreciated in value.
And therefore you don't have the cash sitting around, and also that investment could tank the following day.
Absolutely. He wanted to do that for all taxpayers with wealth greater than $100 million. Harris appears to support raising capital gains tax rates to equal the ordinary income tax rates, but she hasn't opined for what set of taxpayers she wants to do that. So is it the same as Biden, where it's over $1 million or $100 million? Or is there going to be a threshold that's lower?
Again, details aren't clear at the moment, but the theme here is that many of these proposals are aimed at increasing taxes on wealthy individuals although there is definitely uncertainty about how we're going to define and identify who those wealthy individuals are.
Okay, so if we were to very quickly summarize everything we've said so far, to boil it down, Harris, like Biden, would likely seek to raise taxes on large multinational corporations and on wealthy taxpayers while expanding tax breaks for low to middle income earners, both with and without children.
And might I just say that is awfully generous coming from a childless cat lady. All right, time for the good, the bad, and the ugly. And I hate presidential campaigns so much, I am going to sit here and ask you to come up with a good thing.
Okay, it was your idea to do this episode.
I just felt like it was our responsibility.
I think you are correct. It is our civic duty to be doing an episode, even as speculative as this one is, on the potential tax proposals on the Democratic side. And so I feel good about the fact that we are attempting to inform the masses, inform the electorate around what a Harris-Walz ticket might put forward.
I agree. And I did ultimately like doing this episode because it gave me an opportunity to pretend that we live in an era where policies and proposals and perspectives and viewpoints actually matter, and not someone's laugh and coconut trees. Like we can talk about, we pretended that real things matter for a little bit, and that was fun. All right, bad. So the one that I really don't like is this $400,000 cutoff, $100,000 cutoff for quote unquote wealthy taxpayers. It feels arbitrary. It's not informed by any statistic or data. It's not even relevant anymore given all of the inflation that has taken place over the last 4 years.
Oh, yeah.
So yes, I am all for having, quote, wealthy individuals pay their fair share of tax. And there's many ways that we could adjust that don't involve raising the ordinary income rate on someone who's making $400,000 or $500,000 a year.
Yeah. We've already talked before, even on this episode, that we don't like the stock buyback tax. I'm going to throw that in there with another bad policy. And then... yeah, let's go back to the corporate provisions. What do you think of those?
Okay. You know, raising the corporate tax rate is interesting, and I think there are limits to how high you can go, right? So among OECD countries, the average corporate statutory tax rate right now is somewhere between 24 and 26% when you make the average weighted by GDP. The EU is about at 21%. So right now, we're kind of already above that once you add in 4% for state taxes. So we're already at the high end of things. Like, do we really want to be or need to be that out of line with other countries, other developed countries? All right, ugly.
There is the question in the back of my mind. If Harris gets elected, what happens with Congress?
Yep.
And is there any hope whatsoever that anything she would propose would ever get passed in what I'm going to go ahead and say has been a fairly dysfunctional legislative branch for the last several years?
You make an excellent point. It's a good time to remind everybody that the president doesn't create tax legislation. They don't pass tax legislation. All of that happens in Congress, and then it's just the president's job to either sign it into law or veto it.
We'll be back soon with a discussion of Trump's tax policies.
Looking forward to it.
That makes one of us. Well, that's all we have time for today.
Be sure to join us for more tax nerdery on future episodes of Taxes for the Masses.